Over the last few weeks, there's been a flurry of short covering across the S&P 500 and the wider market, and it's already causing some stocks like AMC and Bed Bath & Beyond to begin to run, and I think when coupled with the APE dividend, will cause the AMC squeeze. So stay tuned, and let's make some money. And now I want to dive straight in with the key information. So, Immortan GME tweeted saying just some weekend thoughts. These two things are actually quite worrisome for the shorts and for the wider market. And he said, number one, the market has been going nothing but up on the back of short squeezing across over-shorted growth names and across the S&P 500 as a whole. And he said, what happens if that covering is done and it spreads across to GameStop and AMC as well, pushing the price up higher and beginning the squeeze? You may have seen this tweet from Gavin, who said there's been a lot of short coverings over the last week. He said it's the third highest day of short coverings in over a decade. Last time was in January of 2021. Over the last week, short covering outpaced long sales by a whopping 3-1. Now, obviously, this isn't specifically in AMC and GameStop, as obviously we know the shorts haven't covered. This is in the remainder of the growth stock names and also across the S&P 500 as a whole. But obviously, these hedge funds covering their smaller short positions in other stocks has pushed up the market as a whole over the last few weeks, and it has also been causing stocks like AMC, Bed Bath & Beyond and GameStop to move upwards as well. Obviously, as I said in some of my previous videos, AMC has now broken above this weekly downtrend line and has actually been holding above the line, meaning the shorts right now are in deep trouble and close to that margin call position. If the wider market and the wider S&P 500 continues to squeeze upwards and we see more short covering across the wider market, it's likely to drag AMC, GameStop, Bed Bath & Beyond and other meme stocks along with it. And obviously, if these stocks continue to be dragged upwards with the wider market, these hedge funds that have billions of synthetic short positions will also end up being squeezed and forced to cover. And he said after not moving for the entire 7 weeks of the non-stop equity stock rally, suddenly altcoins are back as well, because nothing nefarious probably. But obviously we know it's these hedge funds pumping these silly altcoins and these silly newly IPO'd stocks to generate additional liquidity to meet their margin requirements. And he said the timing here is key and also is the selectivity. Just like how these hedge funds the other week were pumping HKD, now they're starting to pump altcoins. These crypto coins and newly IPO'd companies are being pumped at a time when the market is still basically in a bear trend, minus the squeeze we've seen over the last few weeks. Obviously, the economy is falling into a recession, but yet some of these altcoins and these newly IPO'd stocks are running 2,500% in a few days. And obviously, if this wider market squeeze continues and AMC, Bed Bath & Beyond and GameStop continue to be dragged upwards and these hedge funds run out of newly IPO'd companies to pump, or they get found out and can no longer continue this practice, it will likely end up squeezing the shorts that are currently shorting AMC and GameStop. As I said, this is already starting to happen to Bed Bath & Beyond, which over the last week or two has run from this area of $4.38 all the way to $17 and above. Obviously, these hedge funds that are shorting the entire basket of meme stocks, aka shorting AMC, shorting GameStop and shorting Bed Bath & Beyond, are now one step closer to that margin call, as BBBY has run from $4 all the way to $17 and above. At the same time, AMC has also run from $14, $15 all the way to $24 and above over the last week or two as well. Again, this is just slowly squeezing these shorts as the market continues to rally, while they are shorting a lot of stocks across the market, also dragging up AMC, GameStop, Bed Bath & Beyond and more. Now, we also wanted to touch on the AMC APE dividend and some of the specifics that have been picked out by Peter Han. And guys, if you haven't already, be sure to sign up to Moomoo right now using the link in the description below. You can currently get a whopping 10 free stocks worth up to a total of $25,000. Moomoo is also very easy to use, it's incredibly customizable, they've got tons of technical indicators and advanced charting tools. Moomoo also, from their latest customer agreement, officially states that they do not sell your order flow and they're not a payment for order flow broker. Moomoo has also stated they will indeed be issuing and distributing the APE dividend on Monday the 22nd. He tweeted saying, not enough people seem to be aware that APE trading will be done through the DTC same day funds settlement system. And he said, one, that means you can't buy it through margined accounts, which means it will be far less liquid than the AMC stock, meaning you'd hate to be a short seller trying to short APE because the stock will be so illiquid and very, very volatile. But number two, it also means the settlement for the APE stock will effectively be on T+0. These funds don't have T+2 or T+35 days to find APE stock to deliver, it's same day delivery. I think this means we're going to see tons and tons of failed to deliver APE shares, especially on release day on the 22nd and likely for the following week after that. All of these funds have to deliver APE on the exact same day. They don't get T+2 and they don't get T+35, so they'll have to register all of these fails to deliver. Also, because there's no options chain, these shorts can't roll their FTDs and cover them on a T+35 basis, giving them tons and tons of time to locate the stock and deliver it. They have to deliver on the exact same day. This screenshot says same day settlement. As long as the AMC preferred equity units are held through DTC or its nominee, aka computer share, if applicable, the AMC preferred equity units will trade in the DTC same day funds settlement system. And it says the DTC requires secondary market trading activity in the AMC preferred equity units to settle in immediately available funds. Therefore, it says second, real-time settlement would require that all transactions be immediately paid in full by investors with cash in hand and securities owned for each trade at the very moment it's executed. aka these shorts can't short APE without having located the share. They have to own the share and have already borrowed it legally to be able to possibly short it. That's why it's going to be so difficult to short APE, because these hedge funds won't be able to locate and borrow APE to short. Therefore, they've got no option. Retail Stock says it sounds promising. It's cash only and same day settlement would therefore be another loop that Adam Aaron has closed. It seems like Adam Aaron has basically thought of every single option the shorts have when creating this APE dividend and is closing off every single loophole. These shorts can't create synthetic APE shares before the stock is even released. They can't fail to deliver on a stock that hasn't even been invented, and they therefore can't borrow and short this stock because they won't be able to locate the shares, and they can't short without locating because of this same day settlement. And Adam Aaron has also tweeted saying there is such garbage information out there right now from people or bots who try to scare you and cast doubt. And he said maybe they don't like you or me, or they want to make a name for themselves at AMC's expense. Now, I think this is a brilliant tweet from Adam Aaron acknowledging the existence of bots or people that are specifically trying to stray you away from your investment in AMC. Adam Aaron obviously knows these hedge funds are panicking and are creating or paying these bots and paying these people to try and dissuade us AMC apes from investing in the AMC company to cause the squeeze. He's obviously saying maybe they're trying to make a name for themselves at AMC's expense, aka trying to crush the squeeze opportunity so that AMC doesn't squeeze and these hedge funds don't go bankrupt. Over the last few days, Adam Aaron has been tweeting loads about the AMC APE dividend, trying to dispel all of the FUD that he possibly can, because I think Adam Aaron really means business with this AMC dividend. He knows the shorts are scrambling and he's trying to dispel all the FUD that he possibly can as quick as he possibly can so that AMC apes don't get scared off and don't sell their ape shares when the dividend hits. Now, something else I wanted to quickly touch on is the last day you can possibly buy AMC shares in order to receive your APE dividend. This is something I've incorrectly spoken about in my previous videos, and I want to apologise for that now that I know the correct day. Vegas Chef Andrew tweeted saying just a little AMC APE FYI. He said you can buy AMC all week and still get APE on Monday. He said check with your broker first, but most are saying that you can. Public has said that all AMC positions purchased before market close on August 19th will be eligible to receive the APE dividend. Previously, I believed and I said the AMC APE dividend count was taking place on the 15th, and therefore the last opportunity you could get to receive that APE dividend was if you own shares by today, the 15th. But Public is saying that even if you buy AMC on August the 19th, you're still eligible to receive that APE dividend. That means that if you're currently on a different broker or you want to purchase more AMC shares, you can do so for the rest of this week and still receive that APE dividend. It says APE dividends will be issued at the close of trading on Friday, August 19th. Please note that while dividends will be issued on August 19th, they may not display in your public account until on or after Monday the 22nd. So that means you can indeed buy AMC at any time this week until close of play on Friday and still receive your APE dividend. And I also wanted to quickly touch on the wider market as a whole. Over the last few weeks, many growth stock names and the wider market as a whole has been squeezing upwards. However, overall, I do believe this is indeed a bear market rally. This is a bear market rally which is turning into shorts covering and shorts being squeezed. But as I said, I do believe overall we're still very much in a downward trend, and I do still believe the market will indeed crash. As Otto tweeted, he said it doesn't get more obvious than this. He said zoom out and you'll see that longing today is picking pennies in front of a steamroller. If we look at the Nasdaq over the last few years, we can see the Nasdaq has shot up massively over the last few years. It did begin to crash over the last 6 months, but has had a small relief rally over the last month. And obviously, if you compare this to a chart that shows all of the different phases of the market as a whole, it does indeed look like right now we're currently in this bull trap phase. Everyone believes the stock market will return to normal and we will see new highs in the S&P 500, but indeed it's just a bull trap, a bear market rally before the crash resumes. Right now we're seeing shorts across the market being squeezed out of a number of names, which is pushing the S&P 500 higher and could potentially cause the AMC squeeze. But I do believe on the whole the crash will indeed resume over the next 6 to 12 months. And as Charles Payne tweeted, he said all we need now is a Lehman-like collapse and rush, drama and panic to bail out the banks. So far, the Dow is basically perfectly mirroring the Dow from back in 2008. Back in 2008, we did indeed have a bear market rally before the crash resumed. But guys, be sure to let me know what you think down in the comments below. And as always, guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.